Good morning, investors. You are on KleverStock with me, Shobana, serving you the latest morning bell updates. Kicking off with the opening bells updates on our local market. Bursa Malaysia opened marginally lower this morning, taking its cue from Wall Street's downbeat performance overnight. At 9 a.m. today, the FBM KCI is 1.47 points to 1,625.96 from Monday close of 1,627.43. After opening of 0.43 of a point, easier at 1,627.0. On the broader market, decliners outpaced decliners 213 to 87, while 219 counters were unchanged, 2,248 untraded and 11 suspended. Turnover stood at 103.41 million shares, valued at 63 ringgit 90 cents million ringgit. Rakun Traders in Bahas says the foreign fund may be locking in some profit, reflecting their short-term vision. He said, nonetheless, we felt which in the most Southeast Asian market have been performed positive attribute to the attribute valuations, of which we have mentioned numerously. For today, we expect the index to trend in 1,625 to 1,635 range. Among the heavyweights, Maybank rose 2.0 cents to 9 ringgit 94 cents. TNB increased 4 cents to 13 ringgit 32 cents, and SD Credit added 3 cents to 5 ringgit 88 cents. While Public Bank and Hong Leong Bank were flat at 4 ringgit 30 cents and 21 ringgit. Meanwhile, CMB fell 3 cents to 7 ringgit 58 cents. IWH Care declined 1 cent to 8 ringgit 19 cents, and Celcom DJ trimmed 2 cents to 3 ringgit 59 cents. On the active list, StrikeTag and Genting Malaysia backed 1 cent each to 19 cents to 2 ringgit 37 cents. Tanko inched half a cent to 97 cents, and Next Green was flat at 78.5 cents. Perak Transit and Perniaga edged half a cent each to 28 cents to 23 cents. And MMS Ventures gave up 7 cents to 52.5 cents. Top gainers, Petronas Dagangan jumped 16 cents to 22 ringgit 26 cents. MNRB expanded 9 cents to 2 ringgit 11 cents. Hong Leong Industry went up 8 cents to 15 ringgit 18 cents. And Sarawak Oil Pumps grew 7 cents to 3 ringgit 80 cents. As for the top losers, PPB Group displayed 22 cents to 11 ringgit 38 cents. Cyberjaya Education Group was 13 cents, easier at 18 cents. Petronas Gas declined 12 cents to 18 ringgit 40 cents, and Petronas Chemical shaved 10 cents to 3 ringgit 31 cents. Moving on to local currency updates. The ringgit opened slightly easier against the US dollar this morning, reflecting a technical correction after its recent gains. At 8 a.m. today, the ringgit stood at 4.1485 or 4.1595 versus the greenback compared to yesterday's close of 4.1480 or 4.1515. Bank Melawat Malaysia Berhad Chief Economist Dr. Muhammad Afizan Abdul Rashid said the correction was understandable given that local currency has been in the overbought position based on the technical indicators. He said, having that said, ringgit should remain constructive in the mid to long term, underpinned by recent economic growth and narrowing fiscal divide, which can be deemed credit positive by credit rating agency. Today, we expect the USD and MOY to range between 4 ringgit 14 cents and 4 ringgit 15 cents as traders and investors await United States data points. Meanwhile, the US dollar index strengthened by 0.24% to 99.53 points as market expectations for the potential US interest rate cut in December continue to fade. Muhammad Afizam said the US Federal Reserve remained cautious on timing any policy easing, prompting markets to look to the September US Not Farm payroll data on Thursday for clear economic signals. He added the Federal required for the rate cuts support the US dollar, keeping the ringgit range bound for now. During the opening session, the ringgit traded higher against the basket of major currency. It appreciated versus the yen to 2.6720 or 2.6792. Rose against the euro of 4.8077 or 4.8204 from 4.8125 or 4.8166 yesterday's, and improved the British pound to 5.4561 or 4.4660. At the same time, the local currency traded mixes against Asian currency is strengthened against the Thai baht of 12.7649 or 12.8111 and edged up versus the Singapore dollar to 3.1836 or 3.1922. The local note, however, was little changed against the Indonesia rupiah to 247.8 or 248.6 and was almost flat against the Philippine peso at 7.04 or 7.06. Continuing with national economy updates, Malaysia is poised to be the second fastest growing economy in ASEAN after Vietnam, as string upbeat data prompts a major research house to lift their full-year growth forecast. Analysts say the country's stronger than expected 9-month performance has set a firmer foundations for the years ahead, giving policymakers and investors a clear runway for the rest of 2025 and into 2026. HSBC Global Investment Research is the latest to turn more optimized, raising its 2025 gross domestic product forecast to 5% to 4.2% previously. The bank expected Malaysia's growth forecast to be not only for domestic license but also the defect deployment polishing. It said Malaysia's proactive diplomacy, particularly at the recent ASEAN Summit, reflect the nation's ability to maintain neutral while bringing major trading partners to the same table, a trade that helped reduce external uncertainty. HSBC research said that given better than expected outturn, reduced trade uncertainties and domestic license, we are upgrading our GDP growth forecast to 5% to 2025 from 4.2%. This means Malaysia is likely to be ASEAN's second fastest growing economy, alongside Indonesia and just behind Vietnam. The research house also bumped up its 2026 projection to 4.5% from 4% earlier. Maybank Investment Bank Berhad echoed the bringing outlook, revising its 2025 GDP forecast to 4.7% from 4.2% and raising its 2026 projections to 4.5% from 4.1%. Analysts Shuhaimi Elias and Azli Roslim said Malaysian domestic demand remains anchor of the Malaysia's growth narrative, even as the net external demand remains volatility. In a macroeconomy report, they said income indicators, policy support, and ongoing recovery in tourism are pointing to firm caution ahead. Standard Chartered Global Research also upgraded its 2025 GDP estimate to 4.7% from 4.2%, following Malaysia's solid 9-month expansion of the 4.7% this year. However, it trimmed its 2026 outlook to 4.5% from 5%, citing normalized external demand after early export front-loading. Consumption and investment activities should continue to support growth in the coming quarters, it said, adding that Bank Negara Malaysia is likely to keep the overnight policy unchanged at 2.75%. Moving on to corporate news update, Celcom DG Berhad is expected to record lower earnings in the financial year 2025, following downward revisions for the profit estimate. CIMB Securities Sdn Berhad said it has a cut of financial year 2025 to financial year 2027 forecast core earnings per share on Celcom DG by 12 to 16% to account for higher expenses. This includes increased traffic changes, namely 5G and fiber access fee, as well as rising operation and maintenance costs. The division also factored in the provision of doubtful debts for financial year 2025. Post-revision, we forecast core earnings per share to fall of 9.1% year-on-year in financial 2025, then grow 6.4% and 4.4% in financial 2026 and financial 2027. It said this is driven by more gradual realization of synergy of CelcomDigi's third quarter 2025 core EPS fell 6% quarter-on-quarter on higher depreciation and efficiency of tax rate. CIMB Securities said its 9 months of 2025 core EPC missed expectation at 66% of financial of 2025 forecast and 69% of consensus. The firm estimates normalized earnings before interest and tax each up just as 0.9% quarter-on-quarter, as higher service revenue was largely offset by the higher depreciations. It said year-on-year is declined 11.4% owing to higher traffic changes, including 5G and fiber access costs, device costs, and despite lower device revenue and PFDD. CelcomDigi has maintained its financial year 2025 guidance for lower single digital revenue growth, low to mid-single digit EDBI growth, and capitalized expenditures to sales of 14 to 16%. CIMB Securities downgraded CelcomDigi from buy to hold with lower target price of RM3.85, down 9%. Finally, wrapping up, we have major corporate developments and trade across Malaysia. First, we have Papin Bank posted a net profit of RM1.84 billion in the third quarter ended September 30th, down from RM1.91 billion a year ago, while quarterly revenue rose by 9% to RM7.4 billion. Next, we have Kumpulan Kitcon, world subsidiary Kitcon Sdn Bhd, as asset of RM60.805 million letter of award from Sime Debbie Properties Sdn Bhd for main building works at Taman Perdagangan Elmina in Rawang, Selangor. Next, we have Icebusiness Petroleum associated with 3D Energy reported encouraging of gas-bearing intervals in easing one well in Australia outward basin, confirming of significance of gas change sandstone in key reserve. Next, we have CelcomDigi posted a lower of third quarter of 2025 net profit of RM341.23 million versus RM436.98 million a year ago, while revenue was largely unchanged at RM3.12 billion. At last, we have Infominia as accept a letter of concern from the Ministry of Home Affairs worth of RM66.13 million to provide technology infrastructure operations, maintenance and support service to the National Registry Department. That's a wrap for Morning Bed Updates with me, Shomna, on KleverStock. Thank you for choosing us investors. Stay tuned for the next live coming soon.